Well, Australians are living through the worst housing crisis.
The rent where they were living was just skyrocketing, and we know that you can't work.
Australia's housing crisis has reached a critical...
Real estate agents are...
Australian house prices...
Buyers market in Sydney with the auction...
Australia, a land of breathtaking natural beauty, vibrant cities, and some of the priciest real estate on the planet. In the 70s, the average house in Sydney was around $18,000. Fast forward to today, Sydney and Melbourne have led the charge as it's skyrocketed to over $1.1 million. Nationwide, the median value has reached $802,375 Australian dollars. But what exactly is causing this extraordinary price growth? Could it be government policies, foreign investment, or other social factors? Let's explore the reasons behind Australia's pricey real estate market. It's the year 1945, just after the Second World War. The Australian government sought to strengthen the defense, economy, and infrastructure of the country, which led them to embark on a large-scale immigration process targeting Europeans. Though it was biased, many Europeans who were displaced because of the war began to see Australia as a better place, due to the various advertisements put out by the Australian government to promote Australia's lifestyle. Over 170,000 Europeans arrived between 1947 and 1954. With the sudden surge in population, combined with the government's focus on wartime efforts causing them to neglect housing development, the perfect environment for a housing shortage was created. By 1950, Australia faced a severe housing shortage. This forced the government to respond with large-scale public housing projects. However, this wasn't enough. As the population grew, housing affordability slowly became a nightmare. As a result, Australians began seeking a better quality of life, leading to suburbanization and suburban development. Government initiatives like the First Homeowner Grant and the 1945 Home Ownership Scheme intensified housing pressure. The First Homeowner Grant, introduced in 2000, led to increased demand for houses as the government encouraged new homeowners by granting a discount of up to $7,000. This opportunity was only available to Australian citizens, first-time buyers, and permanent residents. While this seemed like a good idea, it slowly led to an increase in house prices, decreasing the purchasing power of the citizens. The White Australia Policy, 1901 to 1973, restricted non-white immigrants. Limiting immigration to only whites led to a slowdown in construction and housing development, restricting the diversity of skills and innovation. This, in turn, slowed the economy and negatively impacted investment in housing and infrastructure. This legacy of uncontrolled population growth, post-war immigration, and neglected housing development laid the foundation for Australia's real estate crisis. Australia's robust economy, driven by the financial and mining sectors, obviously attracts significant foreign investment.
Knows how to sell some of Sydney's most expensive houses, and last year was a very good year.
We did, of course, to about probably $150 million now, and then we're looking at double that figure.
While it can be argued that these investments contribute to economic growth, they also undeniably reduce housing affordability. By the end of 2023, foreign economies had invested up to $4.7 trillion in Australia. It is important to note that the real estate industry accounts for nearly 12% of total foreign direct investment, ranking third among other industries. This substantial investment has had far-reaching consequences on the Australian housing market. The Chinese investors are Australia's most enthusiastic house hunters. These foreign investors, over the years, have increased their demand for Australian houses, using them as an investment opportunity. Some of these investors don't even have an idea of the places they buy, meaning they buy sight unseen, relying on agents and online platforms. According to statistics, 40% of foreign investment in Australian real estate comes from China. It's like a game of Monopoly, with Australia's housing market as their playground.
3 of the nation's capitals have been ranked among the 10 most unaffordable global cities. Keith, what hope is there going to be for younger Australians to buy a home, get into the market after they've seen these sort of figures, which, so Adelaide is 9th and Sydney 2nd in unaffordability. I mean, Adelaide's in that top 10. Now, what is going on, and what is the LNP going to do to help break this sort of cycle of unaffordability at the next election? This seems to be the key to getting the youth vote.
Using the simple strategy of buying and flipping, they've succeeded in artificially driving up demand and prices. A good example is the Greenland Group. This Chinese property developer has invested so much in Australian real estate, including the $1 billion Greenland Centre in Sydney. But why do these Chinese investors find Australia so alluring? For starters, China's economic slowdown has eroded confidence in its domestic share market, causing wealthy Chinese investors to seek other places to invest. At home, they don't have enough channels to invest in. But in Australia, most of the properties are freehold, meaning whoever buys them can keep them forever, if they are financially able to do so. In China, the land belongs to the state, and anyone who buys land there can only hold on to it for 70 years. This is obtained through a land grant between the land user and the government. Though it is not certain what happens to the land once the period expires, the grant may be renewed, but at a very high rate. These strict policies have discouraged Chinese investors from obtaining land in their country and prompted them to move to other countries, particularly Australia. According to economists, Chinese investment has significantly contributed to Australia's housing affordability crisis. Australia's taxation policy is a recipe for the shattering of the dream of owning a house. Add negative gearing, tax discounts, and capital gains, and like magic, investors come trooping in, driving up demand and prices. Think of it as a game show. Where to buy a house? You'd have to sell your kidney, liver, and maybe your firstborn child. According to John Daly, the CEO of the Grattan Institute, taxation policies in Australia seem to prioritize investors over first home buyers. Australia uses negative gearing, meaning that investors can claim losses on rental properties against their taxable income, while for first home buyers, there are no tax benefits. And as their income increases, so does their tax rate. Australia's high standard of living, its exceptional education system, and quality healthcare make it an attractive destination. This has also led to the desirability to increase the price of properties. Social factors fuel the housing unavailability crisis, the growing population, aging population, and urbanization. Since opening its door to immigrants, the population of the country hasn't stopped increasing. According to the Australian Business Statistics, 2020 to 2021, Australia has experienced an annual increase of 1.5% in population. The Australian lifestyle choices or preferences also play a role. Most Australians seek houses with close proximity to beaches, parks, schools, and other amenities. The waterfront properties in Sydney, for example, are usually higher in price than other properties. Also, properties in coastal areas like Byron Bay also experience rapid price increases. According to Michael Pallier, director at Sydney Sotheby's International Realty, there's just something about being close to the water. You have beautiful views, and you can even swim or fish off the balcony. Australians are willing to pay more to acquire houses that scream, "I'm living my best life." The result, the great Australian dream becomes a pricey wish. As earlier stated, in the 70s, the average salary was $4,200, but an average home in Sydney was about $18,000, meaning an average individual would have to save up to 4 years of his salary to buy a home in Sydney. Fast forward to 2024, the average salary went up to $112,000, while an average home in Sydney is $1.6 million, meaning you'd have to save your salary for more than 14 years to buy an average home in Sydney. According to statistics from the Australian Bureau of Statistics, the price of houses in Australia grew up to 31.4% in the last 5 years, but the average salary growth rate has only increased from 2% to 3% in Australia due to factors like inflation and the COVID-19 pandemic. The seemingly never-ending gap between wages and housing prices is going to have consequences, not only on the citizens but on the entire country, as mortgage and loan burdens have now become unsustainable. The rising interest rates also worsen the issue. Loan terms have changed as well. The average loan term as of 2022 was 25 years. According to Dr. Richard Holden, professor of economics at UNSW Business School, Australia's housing market is experiencing a perfect storm: stagnant wages, rising prices, and unsustainable debt levels. Martin North has also described mortgage stress as a ticking time bomb in the Australian economy. The supply of houses in Australia is less than the demand. The fundamental principle of economics dictates that when the demand is more than its supply, prices increase. Australia's housing is not an exception, as limited land release, chronic underbuilding, and constraints on construction have contributed to a shortage in demand. But what exactly is causing this? Around 20,000 homes were built in Melbourne in a period of 10 years. If such an amount of houses have been built, why then is the supply rate still reducing? Apparently, many new homes in Australia are like stocks, as most of the houses being built aren't suitable for families to live in. Instead, they are used for storing wealth. Also, a significant percentage of new homes estimates suggest around 20 to 25% are now utilized as short-term rentals like Airbnb. Some of the buildings are also of poor quality and not safe for humans. An example of such a building is the Opal Tower in Sydney. This building has had its fair share of controversies after cracks started to appear.
The rental property Kyla's been living in with her baby and her 4-year-old has become a health hazard, riddled with mould.
Australia is trying to build wealth and has succeeded so far, but at what cost? Risking the life and the health of its citizens? This would have bad consequences on the entire country in years to come. Imagine a future where every Australian can own a home, where the old Australian dream can be achieved without constraints. For many, this dream seems unrealistic, and it's beginning to look like the future of Australia's real estate market is bleak. This is why innovative solutions are needed. The government has a huge role to play, as its initiatives can make a significant difference. Implementing increased funding for housing programs looks promising. Additionally, crowdfunding and co-living spaces seem like potential solutions. According to Dr. Darina Pajani, Associate Professor in Urban Planning at the University of Queensland, Australia, some of the possible solutions include increases in market rate housing supply, caps on annual rent increases, rent assistance, and social and public housing rentals. If these solutions are explored, more Australians might finally be able to acquire the houses of their dreams. The future of Australia's housing market? Though it's unpredictable, experts predict a steady price increase driven by demand and very limited supply. This is good news for investors. According to statistics, more Australians would rent by 2030. Affordability will remain a challenge, but hopefully, solutions begin to emerge. Fingers crossed. The government might also begin to prioritize affordable housing. The magical investments might also come to an end as the government might introduce stricter taxation policies on foreign investments.
Chinese investors have been pulling their cash from these shores. Money flowing out of China has been restricted, and it's becoming harder for foreigners to invest in Australia.
However, for now, according to a new domain report, prices are expected to increase and surpass $1.7 million in Sydney. So far, political parties have proposed housing strategies that emphasize long-term planning, infrastructure investment, and sustainable urban development to tackle the ongoing housing crisis. The future is uncertain, but it's clear that real estate in Australia will continue to evolve. Australia's housing market might seem out of reach for many, but understanding these challenges is the first step toward a solution. In the end, will Australia's housing market ever return to a place where the dream of home ownership is accessible to all? If you're planning to buy, invest, or just stay informed, subscribe for more insights.